Target stock continues to sell off. TGT stock at this point is an interesting buy. Now, we're seeing the broader stock market selling off, of course, but this is really driven by a couple factors that operate outside of target stock to some degree. First, a lot of the selling we're seeing is, of course, Nvidia, which really pushed the stock market upward. Their growth rate is declining, something I've been kind of focusing on lately. Because that growth rate is declining, investors who were pushing for that growth rate are now exiting. So we've seen NASDAQ drop nearly 13% since its peak in February 18th. That's one portion. The next portion, tariffs. Are they on? Are they off? Are they on? Are they off? And this game is chaos, and it's causing the stock market to sell off today even more. Tariffs themselves, of course, are affecting goods coming from China, which I think it's 20%. They initially hit 10%, then he doubled it. So anything really that you're getting out of Target Corporation would mean prices going higher in Target. All right, not everything, of course. There's a lot of products that are made here in the United States and elsewhere, but a lot of products do come from China. Okay. Now, the other thing is the economy is slowing to some degree. Tariffs are going to make it worse. The lack of consistency in the stock market itself or the economy itself because of the game that's being played with tariffs is creating an environment where we're seeing stocks sell off. Target stock at this point, given some valuations, it's an interesting buy. In fact, buying at these prices right now, TGT stock, would get you about a 7.5% yield should Target Corporation hit their revenue and earnings. Even if they sort of miss and you get a lower number, dividends alone are going to get you about 3.25% just from dividends. So when you break down these numbers on Target stock, you look at TGT stock and you think, this could be an interesting buy. Let me jump in. I'll show you some charts that I'm looking at that make Target stock an interesting investment. Here's a 1 hour bar chart on Target stock. TGT stock is the symbol, of course. We got financials just last week, and as you can see, there was a pretty sharp sell-off. They beat on revenue, they beat on earnings. The problem is future guidance. They're basically saying the same thing that Walmart said, and Walmart stock, of course, is really getting hit. Target stock or Target management basically said we see the consumer shifting. We also were fearful of what's going on with tariffs. Now they're projecting about a 1% growth rate for revenue, which is not really growth at all. The tariffs will have an effect. Right now, we're starting off with we have an economy that is slowing down. The growth rates on personal incomes and expenditures or employment and the capability of this economy growing are slowing down. We're seeing that evidence in the money supply growth rate, which has peaked and is now probably going to start moving lower, which means we're in an economic downslide. So that's the first area that we're at. Then you factor in tariffs and what that's going to do to the economy itself. Tariffs are effectively going to cost consumers more, which means less consumption in other places. Now, I just did a video on McDonald's stock, and the thinking there is, and McDonald's stock, MCD stock is rallying. The thinking there is because of the slowdown in the economy and the unemployment rate moving higher, these lower cost meals are going to bring in more revenue. Probably so. But when you look at Target stock itself, with its revenue decline where it is, down to the growth rate of only 1%, it becomes an interesting stock investment. Now, here's a better look at TGT stock itself. Still pretty pricey, and the target I'm looking at, I sit there and I say 100. Now, the projected earnings per share is about $9.25, $9.50, somewhere in there. If we hit 100 or go below, and Target were able to hit their numbers, that's a 9.5% yield on their revenue, as long as they maintain. You would get 3.25% off of, probably a little bit higher at that price level, off of dividends alone. That sure is interesting. Would I buy Target stock itself? TGT stock, no. I own Costco, of course. Anybody who's been following me, Costco is part of my portfolio. Costco's moving downward itself. Won't be selling that. That, I believe, is a pretty good representation of retailers, so I don't have any real incentive to get involved in Target stock itself. Let's take a look at some of the numbers, kind of break these down. Q4, there was an increase on year-over-year growth rate for revenue. Again, and I mentioned this in the intro, that Target beat revenue and earnings, and yet the stock is falling. TGT stock is falling down. Gross margins, 24.2%. These are some thin margins. Operating margins, 4.8%. Net margins, 3.6%. Given margins, you need to do a lot of, given margins being so thin, you need to do a lot of volume. So if we see a big drop lower in revenue, that could be problematic. But they're still projecting, Target Corporation is still projecting a 1% increase year over year for revenue. Not enough for stock markets, or for the stock market investors, broadly speaking. Earnings per share, $2.41 Q4, which was a decline from the $2.98, but this bit did beat expectations of, I think, $2.36 was the expectations for Q4. So earnings per share were pretty solid. Price to earnings ratio, 15.1, is a little lower than broader stock market. And I could see a move lower in price to earnings ratio, maybe 12.5 down to 10. I still wouldn't pull the trigger, but it is an interesting investment. 2025, they're looking at $107.9 billion in revenue, which is from the 106.6 in 2024. It's $1.3 billion, which is basically 1% increase. Projected earnings per share for 2025 is $9.15 versus $8.86 print for the year 2024. Let's break down TGT's stock yield. Treasury yield, 4.325%. That's going to shift quickly. As investors sell off the stock market, they rush into safe haven investment areas, and that means Treasuries. U.S. Treasuries, as you push up the price, yield comes down. So that's your starting point of 4.3%. Earnings per share for 2025, $9.15 for TGT stock. The price, TGT stock price right now, $114.75, giving you almost 8% yield on Target stock. The stock has moved down somewhat today. We're seeing NASDAQ, I think, is down, peaked to bottom at this point, 13% from February 18th when it peaked to now, which is 3 weeks. That's a pretty decent sized move. Again, this is really driven by NVIDIA. The rate of growth consistently is, or it has stopped growing so consistently high. So everybody's getting out of NVIDIA stock. Then you also have Tesla, which is a big sort of push for the NASDAQ itself. Those two things are really kind of wearing on NASDAQ. Then broadly speaking, we are seeing selling in a lot of the other stocks. Given that, 8%, we'll call it, just for ease of stating, is Target stock a buy at this point, considering a lot of the move downward right now is tech stock? Well, the other factor is a slowing economy, and we have no idea what the outlook is going to be on tariffs. Tariffs will make things worse, but not that much worse. I'm more concerned about the international backlash to American companies, more so than I am the actual tariffs to the economy. The economy itself is strong, but declining. The growth rate is shrinking. The money supply is shrinking. The growth of people getting hired is declining. We just got unemployment numbers last Friday, and they were fairly strong, but that's the last of the Biden bump. Now we're going to see the Trump shift, we'll call it politically correctly. I can see the economy shifting downward. We would probably still see economic growth given where we are right now. But I do see American companies getting hit because of the tariffs and sales and revenues declining. So for Target stock, I can see how there's probably still downside. Even if Target were to hit its revenue, the same revenue, or maybe 1% decline, that would mean, and we saw TGT stock dropping down to about 100. If TGT price hit 100 and 2025 earnings hit, say, 875, that's an 8.75% investment right there, yield for earnings. At that price, if Target keeps its dividend where it is, you're looking at 3.25%. Your alternative investment, of course, is the U.S. 10-year Treasury yield. The Treasury will fall as investors hit the sell button on the stock market. They go for safe haven. They're going to be buying U.S. Treasuries. Pushes up price because you're moving a lot of money into price. From there, yield comes down. So given that, the yield on Target stock sure is tempting. Today's not the day to pull the button. Today's the day to kind of look back and say, where does the dust actually settle? What's going to happen with tariffs? How does this play out in the economy? When does the economy slide into sort of a holding area where there's no more losses or growth? The Federal Reserve steps in and makes changes. Administration sits there and realizes what a catastrophe is. Policy shifts continually back and forth is happening. And the fact that tariffs themselves are, genuinely speaking, a bad idea. Once those effects play out, Target stock, TGT stock would be an interesting buy if they maintain their revenues. Even if they slide slightly lower, you're still looking at about 8.25% yield. I think Target stock, TGT stock price does drop below 100, not because it's a bad investment, but because of all the policy shifts, the shift in the economy. I've done a pretty big write-up over the weekend on my Substack. Make sure to stop by there, take a look at that and how I broke down all the various areas of the stock market itself. And also I am if you're watching this on YouTube, I am repurposing all of my videos to my Substack. That's actually going to be the primary. YouTube will get the repurposing as I sort of push away from YouTube as a focus. So make sure to sign up for the Substack newsletter. We'll see you in the next video.